So today I have who is my good friend and a mortgage specialist, um, Pritish Raval. Hey, Pritish, how are you?
Hey, Aditya, I'm doing well. Thanks for having me.
Good, good. How is your day so far?
So far, so good. It's been a busy day. It's busy time of the year. People think it slows down in the winter time, but it's usually quite opposite. Things
Yeah,
are
probably
ramping
not
up.
in Canada.
No, no. How's your day going?
Fantastic. I have attended an event in the morning. It was really interesting. So welcome, guys. If you're joining live for the first time, my name is Aditya Soma, and in this channel, I talk a lot about real estate investing, financial freedom through real estate. Um, and also all those real estate sales, all those topics. So if you're interested in, make sure like and subscribe so that you will not miss out any content from me. But today, let's we'll be talking about some of the common questions that Pritish gets as a mortgage agent, because a lot of investors or new people who are looking to buy a first investment property or first home. You might have a lot of questions, like how much down payment do I need, how many properties can I buy, all those questions. So today I have a special guest, so he will be answering those questions instead of, because all these days I'm answering all those questions. Instead I said, let the expert jump in here.
Yeah,
So
definitely. I'm looking forward to it.
yeah, so thank you, Pritesh. I'm really happy that you accepted my invite and joining me here.
No, thanks for having me. Like I said, I know you're doing an amazing job. Your clients definitely appreciate it. Even any clients I've sent your way, they totally appreciate your expertise and love to partner up with you and continue spreading the good word.
Perfect. Thank you, man. Likewise. So, guys, if you're new here, let me know where are you joining the call from. I would like to see, comment in the chat. What's your name and where you're joining the live from? And feel free to throw any question related to mortgages. Feel free to throw all the questions that you have, because you won't get experts on the live every time. When they're here, you're going to get all your questions answered. So let me start with my questions and people will jump in with their questions. Um, Pritish, so one of the common questions that I get, especially a lot of my clients are similar background like me and you and me, probably immigrants who are here, came as a student or on work visa. So what's can a person who is on work visa can get a mortgage?
Yeah, great question, right? Lots of people coming to Canada looking to immediately acquire a home because they see the value in home ownership, right? So great question, very common question, and yes, if you've got a work permit, you can absolutely buy a house. Your work permit just needs to have an expiry date of 12 months or greater. So you have a 2 year, 1 year, 3 year, 4 year, 5 year work permit. We can absolutely help you get a house. So short answer is yes. Definitely need to get in front of a lender and they can walk you through the process. It's a little bit different than having someone with a PR card, but definitely possible to buy your first home as on the work permit visa.
Yeah, I'll add to it. Even I bought my first house when I was on my work permit, because it's all case by case, right? Like, so if you have a good
Yeah.
job, if you have a work permit valid for another year or two, those kind of things. So definitely go talk to a professional. That's a big thing. And if you're looking to invest in Windsor, or around Windsor, reach out to Pritesh. Another question, Pritesh. This is very, very popular question I get. Even
Mhm.
personally, like I didn't know much in the beginning. Would you suggest variable mortgage or a fixed mortgage?
It's the age-old question everybody asks, right? Whether you're first time, second, I have people who buy their third, fourth, fifth, sixth properties always asking the same question, which way to go? And really what it comes down to is what are your goals? What's important to you? You know, every client has a different goal. So if your goal is to have flexibility, if you're an investor looking to buy a property, maybe potentially taking additional equity out of that property as the market is growing, or also maybe liquidating that property and then buying a bigger property. If you're looking for flexibility and you want to take advantage of low rates with low payments to give you a high cash flow as an investor, you got to go variable. Yeah, you have to go variable. It's going to give you the lowest rate, lowest payment, and the most flexibility. With a
Yeah, but
variable
one
mortgage,
concern, people have is like, oh, if I go for variable, what if the rates increases?
yeah, that's true. Well, variables, it's a discounted rate from prime, and Bank of Canada absolutely controls the prime rate. So, generally speaking, the variable rate is usually always lower, historically speaking, than the fixed rate. There is a small risk. Obviously, your rate is not guaranteed, but you get the benefit of having the low rate initially. So, if over time Bank of Canada increases its prime rate, and by the way, when Bank of Canada does increase their prime rate, they can't increase it too high too quick, because if they do, it's going to trigger a recession in the country because people won't be able to afford all their loans, car loans, unsecured lines of credits. It has an impact on the entire economy. So really, if they do increase it, they're not going to increase it too much. They usually increase it by maybe 0.25% at a time. So it's still a relatively low risk way to go.
Yeah, and is it true that if even though I got a variable, but if the rates I see that it's going up, can I change it to fixed at that time?
Yeah, that's another benefit. You can convert it to a fixed rate. Most financial institutions allow you to convert it to a fixed rate as long as you're converting it to a 3 years or greater fixed term. And there's no charge, no cost, no additional qualification to do that. You simply call your financial institution and have them convert it to a fixed rate.
Got it. Makes sense. And what are the benefits with the fixed rate?
Yeah, fixed rate, that's for maybe individuals who maybe are a little bit risk averse. They want to make sure that their payment remains the same. They don't want to worry about the prime rate. They want one fixed payment every month so they know exactly how to control their finances. So the benefits of the fixed rate are you're not worried about what's happening with the Bank of Canada's prime rate. Your rate's locked, your payment's locked. But there are also some drawbacks. There are also some negatives with that, right?
Mhm.
If you decide to, let's say, you get a new job and you got to move out of the city, or you have to move to a different country, or you need to sell your house for some reason, some sort of financial reason, you're going to have to pay a penalty because you're breaking a fixed contract with that financial institution. And the cost usually to break a fixed term is much, much higher than any variable term.
Yeah, that I didn't know this thing. Actually, I made a small mistake, like not mistake. I didn't know. So when I bought my first this property, the one I'm living right now,
Yeah,
I bought a with a fixed rate, and the rates at that time was like 3.29 or something,
yeah, yeah,
and now I have like my property has went up by like 300,000, and I want to refinance to get a new rates, and I want to pull that money out, but
yeah,
my the penalty is almost like 15,000. So I'm
yeah,
like, do I want to really do that? Because if I refinance with the current rates, by my new mortgage would be almost the same payment as what I'm paying right now.
yeah, yeah.
But because
And you
I
get a lot more equity out of your property.
Yeah,
Yeah,
because I went with a fixed rate. So I agree with you. If you want flexibility, if you want, if you don't know when you're gonna sell, if you're an investor, personally, after this experience, always I'm going for variable. If the rates goes up, I'll make a switch if really it's going up too crazily at that point. So, thank you.
yeah,
Let's take some questions here from the audience.
for
Um,
sure.
Hi, Sumit from Ottawa. Fantastic. Thank you for joining. Sam, hi, Sam. I'm based in Windsor. I'm a new immigrant, 2 years in Canada. I would like to buy a house, but my last 2 years' income was pretty low.
Okay.
The way prices are increased, nearly impossible to buy a house for 400,000 with an income of less than 30K. Do you think a lender or government has any programs to help low-income earners like me?
Yeah, good question. Do you want me to field this, Aditya?
Yes, please. Of
Yeah,
course.
okay,
That's why I
awesome.
have you, bro.
Yeah, perfect. That makes sense. I'm not here to just have my suit jacket on.
No.
No, for sure. So great question, Sam. So the two main factors in qualifying anybody is your down payment and your income. So the first thing is, we talked about it briefly, you need at least 5% down payment. So if you're looking at a $400,000 house, starting point is you need to have $20,000 saved and ready to go, minimum for buying a $400,000. Second factor, which is actually a little bit more important, is your income. So to answer your question, on a $30,000 income, can we get a $400,000 house? No. That's a tough answer, but with an A lender, definitely not. I think even with a B lender, it's going to be tough, because generally, as a rule of thumb, for anybody that wants to know out there, a quick way to do some math is, whatever your annual income is, if you multiply that by 4.5 to 5 times, that's your borrowing power. So for simple math, if you make $50,000 a year, 50, your borrowing power on the mortgage side is going to be about $250,000. Okay. And if you're looking to buy a $400,000 house, your minimum income you're looking to have for the household is going to be around $80,000. Are there programs in place to help individuals with lower income? Unfortunately, there aren't many programs in place like that. Not through any A lenders, at least the some of the financial institutions that I've worked with. Not No programs in place for that. I know that there is the first time homebuyer incentive to help you save and increase your down payment, which is done through the government. But outside of that, there are no additional programs that I'm aware of at this time, which I know is maybe not the answer you're looking for, but definitely the more accurate answer on your
Yeah.
question.
I would jump in here. So, that's one reason, like now you got to focus on making more active income, maybe look into wholesaling, or maybe, trying to find another self-employed business, because probably you're in a wrong job, or, probably you got to find ways to increase your income. Or, how about this, Pritesh? What if I
Mhm.
have, let's say, 30% down, and I'm buying an investment property that has an income coming in, even though my salary is 30,000, but I have 100,000 down payment, and the property is making $2,000.
Yeah, that definitely helps. Absolutely. People buying investment properties that are income generating, that absolutely helps. If you're looking to buy a duplex, right? You're living in one unit, the other unit's rented out. That absolutely helps. We do use that income. So, if you've got a rental property and you're generating, let's say 1,500 a month, that's an additional $18,000 a year that we can add to your $30,000 income. Definitely can make a big difference for sure.
Yep. And Sam is asking another. I don't want to go for B lender and can make it 10% down. Yeah. So to answer your question, pretty much no.
Yeah, it's a tough one. You definitely, I think you got to look at getting a co-borrower, Sam. That's going to definitely help
Yeah.
improve your odds with getting a purchase around that price.
Yeah, that's another great way to look into. If you don't qualify, maybe find another person who qualifies, who has a
Yeah,
better
like
income.
friends, family. Like right now, I have a lot of clients, a lot of applications where there are multiple borrowers. Two, three, four, five, depending on how big the house is. But I've done tons of applications with 3 or 4 borrowers on it.
Yeah, yeah, a great point. And again, another question that I get, I'm looking to do house hacking.
Yeah.
Do you know what's house hacking?
Yeah, it's very common right now. I hear it all the time. Everybody asks me all the time, tells me that they're going to be house hacking. That's why they're buying this house.
Yeah, so
Um,
if someone who doesn't know what's house hacking, right? Like if you're buying to move into the house, but you have either more bedrooms or more units, 2 or 3 or 4 units. You live in one unit and rent out the other units. So question is like, how much down payment do I need to buy a duplex or triplex or fourplex or maybe sixplex?
yeah. So if you're looking to buy, generally on the retail residential lending side, you can go up to a fourplex. On those, you're looking for 5 to 10%, because it's going to be owner occupied, so you don't need to have 20% down. For duplexes, you're definitely okay with 5%. Once you get into a triplex or a fourplex, depending on the finances, they may ask for that additional 5% to get you up to 10% down payment. So definitely a very common thing with investors or individuals who are looking to buy a property. The one thing about house hacking that people may be not aware of is when you're buying a house. So let's say you're buying a single family home, kind of what you're talking about, right? Single family home, it has a basement, couple bedrooms in the basement, upstairs has a couple. So it's a single family home. you're going to rent out the basement because maybe there's a kitchen in the basement as well. You're going to rent it out for a couple thousand or 1,500, a couple $1,000. When you're submitting your mortgage application, you're applying for the financing for that, the financial institution will not consider that as income because it's not a legal separate unit. So in order
Got it.
for financial institution to consider that as income, it has to be a legal unit or has to be retrofitted by the city as a separate unit. And in those situations, so it's a little bit tricky. House hacking is possible, but you definitely can't use that income to qualify unless it's a legal separate unit. Great question. Comes up all the time.
Yeah. So in short, you got to make sure the units are legal, and the units have, if they, but what if they're vacant? Do the lender take market rents into account?
Yeah, so all the time we have clients who buy investment properties simply for the purposes of renting, and they're vacant or they're going to be empty. Obviously, vacant upon receiving the keys, right, or upon closing. In those situations, we order something known as fair market rent value. So we have an appraiser appraise the property and tell us what would this unit or this entire house or these multiple units rent out for, and we're able to use that towards your income. So that's a bit of a hack because really you don't even have a tenant in it. You don't even know whether or not your tenant is going to agree to pay that amount, but we're able to use that amount to qualify you. And it's a very good tactic. Now, not all financial institutions accept those fair market rents, but definitely me and my team, we do. And we've been very successful at helping clients acquire their first, second, third, fourth, even some clients who are getting their fifth, sixth properties using
Yeah.
that tactic.
That's a great one to know. So here we got another question from Rudra Pratap. Hey, my question is, can we buy two houses while on work permit? So basically, instead of giving 10% down on one property, can we do 5% in two properties? Is it going to be beneficial?
Yeah, good question. So you can do that, but you can't buy two properties simultaneously with 5% on each. What you'll have to do is you'll have to buy your first property as your principal residence with 5% down payment. And then once you're living there for some time, you'll have the opportunity to buy your second property, which should be your new principal residence with 5%. Anytime you're going to buy a property, regardless of your status in the country, if you're going to buy a second property and if it's not your principal residence, meaning it's a vacation home or sorry, if it's meaning it's a rental property, an investment property, you have to put 20% down payment. So the only way around that is you buy one and then you're going to buy the next and then you're going to rent out the first one, which will allow you to start generating passive income to help you qualify for a bigger home in the future. Hopefully that answers your question.
Yeah, that's a, again, that's a great question, right? Like, so here, also, like, from my personal experience, I first bought a duplex for 5% down, and then when I went for my second property, within 6 months the bank said, no, you need to pay 20% down. uh, they didn't convince for my reason, but after 1.5 year I purchased another single family home. I said, I'm buying this one for my primary purpose. It was like, the one first I lived in is a duplex and this one is a single family. They said, sure, we can agree on that, we will take the rent income from that one. And I still qualified me here because the reason that it was a common sense, that the reason made
Exactly.
sense to them.
Exactly. Absolutely. And that's exactly what we're talking about.
Yeah.
This is how you can grow your wealth and how you can multiply your real estate portfolio to go
Yeah.
from one to another without necessarily having to try to always save 20-30% for each property.
Power of leverage.
That's it. That's
So
it.
here, I was actually thinking about Sam's question. Hey, he was asking, if he has low income and does not qualify. There is another program that you can look into, Sam. It's called Rent to Own. So you are renting a place with the intention to own the property after 1 year or 2 years or 3 years down the road. If you know that you can increase your income in next 2 years, your salary will be going up, or if you know that there are people who does, like, where there are investors who do, like, literally you go for shopping with them, they will find the property, they buy the property with their money, they lend you, and you just pay the rent and you pay the mortgage. Might be an option if you don't have qualification or if you don't have a enough down payment right now. I have seen a lot of people get a good benefit out of it, because investors are they're not gonna charge you 20% or 30% or 50% on top of the price that you're buying right now. They just charge like 10-15%, taking the average appreciation into account, and they already fixed the price right now. So that's something you can look into. It's called rent to own. Search, there might be a lot of videos on that topic. Okay, so another question, Jane. Hi Aditya, do you think 150,000 property in Windsor should be good for first time home buyers? If yes, how much do I have to pay down, and approximately monthly will be my mortgage? So before I let you answer on the mortgage side, let me answer something on the price side.
Yeah.
Hey Jane, it would be fantastic if you can find a property under 150. Unfortunately, in Windsor right now, finding a property under 250 is really close to impossible, unless you are buying a first time home buyer where you have to redo the whole things. So if you want to buy a first time home buyer home where you can show that you can live in that, probably you're looking, the minimum price you're looking at is like 300, 350, in between 300 to 350 or 400. That's where you can find the properties. Maybe if it's a 2 bedroom and a smaller one in a West End or Ford City or downtown, those neighborhoods, maybe 280, 270, 260. But under that, it's impossible, because even the lots are selling over 200 right now in residential lots. So um, Pritish, I would let you answer on that. How much? Let's take a simple example. How can I look? How much would be my payment if I'm buying a property for 300,000 and
Yeah. So the first question was, simple answer is you need 5% down payment, right? So to answer that part, minimum is 5%. And then for how to calculate your payment, simple thing to do is go to Google, type in mortgage payment calculator, and you can play around with those calculators, and it'll tell you, you can input your own interest rate, you can input the mortgage amount, the number of years, and all those things. But as a rule of thumb, if you ever wanted to, like, let's say you're just like driving on the road and you see something, or you're looking at a house and you want to know very quickly, you pretty much can, for every $100,000 you borrow from the bank, it's approximately a $500 payment. To answer your question, if you're looking to borrow approximately 145,000, your payment's going to be about $660 a month, on a 5-year standard 5-year term nowadays. Yeah, we can even play around here and then
yeah, so
calculate.
here's one of my favorite
Yeah.
calculator that I use all the
Yes.
time, ratehub.ca. Just I'll put the link in the chat. Just throw the number in there. It will tell you everything, how much you need. There are a lot of
There it
calculators
is.
online. Just ask
Yeah.
Google. So this
Yeah,
one, like,
that's it. Yeah,
pretty
that's the
cool.
easiest way to determine. Yeah.
Yeah. So if you're buying a 400,000 home, 5% down, you need 20, and there
Yeah.
is a CMHC insurance because you're paying less down payment, and you select amortization period. If you want to pay quickly, put 20 or 15. Generally, I go for 25.
Yeah.
Mortgage rates. You can see what are the rates available. Maybe pick the highest one to see how much payment you need. There you go. You have your monthly payment, and you have even your, at the time of closing, how much land transfer tax. So you can even add your expenses to see what expenses you need,
Yeah.
property tax, and you can add all those things here. So there are a lot of calculators online. Just make use of them.
Yeah.
So let
And then
me stop this
and
screen.
plus your lender will be able to help you with that anyways too. But yeah,
So
quick way to check is just online. Yeah.
yeah, that's another thing, guys. If you don't know how much you would qualify for, that's why I have the expert here. So we're gonna put Pritish contact info in the chat. So reach out to him, get a pre-approval, see talk to the expert, because if you don't know, if you qualify, you don't know how much money you need, you don't know how much mortgage you need, just talk to the mortgage person. That's one thing. When I was a brand new, like when I was looking to get my first house, I was on work permit. I reached out to different lenders. If I first talked to my bank, they said no. I talked to someone else, they said no. I talked to another person. Like finally, after talking to 4 or 5 people, I was able to get one answer: yes. So if you don't reach out to people, you're just not doing anything. Okay, let's go to the next question here. Rosh, can you speak on a first-time homebuyer owner 5% down, in particular requirements for the mortgage approval? Does it need to be within work commute distance with a
With
WFH,
work from
work from
home.
home option?
Yeah.
How long can rent? How long before you can rent?
Okay. All right.
It's a
So
great question.
yeah,
Actually, I get a lot of people, coming from Toronto. They have a job um, in Toronto, but they have an option to work from home. So
yeah,
can they qualify to buy a home? First of all, 4 hours away.
yeah. So actually, we've got a lot of mutual clients, Aditya, that we've helped
Yeah,
that are Toronto based or based somewhere else where their work is, and now they're relocating to Windsor, and they're going to continue working from home. Yes, absolutely. We do take that into consideration. That's the new world now, is working from home. In most cases, um, what we'll do is to verify that you can work from home. As lenders, they'll generally ask for a letter of employment. So to answer your question, what are the requirements? You need to have your pay stub, you got to have your down payment, which is 5%. You have to also show some closing costs, so usually 1 to 1.5% of the purchase price is closing cost. And then we need to verify your income. So for work from home, the way we verify it, we have your pay stub, and then we also have your letter of employment stating that you can work from home. Depending on the type of employment, I'll give you an example. We recently just helped a software engineer, Aditya, you and I, and that individual is working from home, and we didn't require an employment letter. So it's case by case. Depending on the occupation type, we won't require the employment letter, but in certain cases we will. And as long as you can provide an employment letter that says you work from home, you absolutely qualify for the mortgage. And we do lots of those right now. Like, it's a very common thing. You don't get too much resistance on that whatsoever.
yeah. And
Oh,
this continuation for his question, he was asking, after he purchased,
yeah.
when can I rent it? Because probably his situation has changed. He don't want to move in here.
Right. So you have to. It's a little bit tricky. You have to be careful. Similar to what we're saying earlier, it's case by case. It has to make sense at the end of the day. People buy a house, and if you're living in it, and then if your situation changes a few months later or 6 months later, no problem. But if you're trying to, I guess, exploit the rules, and if it's obvious, then you're most likely going to get declined on the next file, right? Because the insurer, since it's an insured deal, let's say CMHC is the one who approved your first mortgage, and now we're going to CMHC for your second mortgage. They have all your data information from the first application, so it has to make sense. I think you talked about it earlier, right? Does it make sense? Common sense
Common
is
sense.
is common sense, exactly. Is if there are flags going up in your own head, it's going to be going up in the lender's mind and the financial institution as well. So it has to make sense. There's not a black and white rule. It has to make sense. If it makes sense, then you can continue doing it. The frequency, it just depends on your life situation and what's going on.
Yeah, and also depends on whom you're working with, right? Like just make
Yeah,
sure your mortgage person is smart enough to give a common sense answer to the CMHC if you're going for a
exactly.
second one after that. Because
Yeah,
if you're going for a second one, maybe another city,
yeah,
maybe your mortgage person can give a common sense answer. Hey, he has a family somewhere there, or
yeah.
his wife didn't like the city. You
It could be anything. It could be
Yeah.
anything, right? One of the things you want to try to avoid is something I ran into with a few clients is they buy a beautiful house, and then the next house they want to buy is a significant downgrade. And so that's tough. That's tough to explain because you have this nice beautiful home, and now you're saying that I've got 2 3 kids and we're going to downgrade to a much smaller home in a significantly I guess not as nice of an area.
Yeah,
So right away that's hard to
that's
explain, right? You know.
yeah.
But
I was laughing because I had a client in the past. He lives in almost a $2 million home in
okay.
Toronto, and he don't want to sell that. And he said, "Can I get a first 5% down house on a fourplex or
Oh
duplex?" I'm
yeah,
like,
that's tough.
how does
That's
the
tough.
lender gonna agree?
That's tough to do.
Really,
Yeah, that's tough to do. That's exactly what we're talking about, right? Like it has to make sense.
yeah, because
Definitely
you
has
are
to make sense.
literally living in a mansion, and now you're
Yeah,
saying that you're gonna
yeah.
move into a tenanted home, and that
No.
to 4 hours away.
Oh
It's
yeah,
it's
that's.
tough.
Oh, and you have a family with 2 or 3 kids,
Yeah.
and
So
you're moving into a two bedroom condo, right? So that's tough to
yeah,
explain
exactly.
that.
So it has to make sense. The common sense.
Yeah,
It.
absolutely.
So the next question, Ankit Sharma, does it matter if I go to A lender or B lender to get my mortgage approval? What kind of a condition that I should really pay attention to? Great question.
Yeah. So like this is something I go through all the time, right? A lender, B lender, C lender, private lending. What are some of the differences? So one of the main things is going to be the rate. A lot of times it's the rate, and also the additional fees and limitations on what you can do with your mortgages. So with an A lender, there's very little fees associated with it, and the rates are public, and there's generally you don't have to try to negotiate too much on the rate. With the B lender, it's a little bit different. There are more fees associated, and you're actually also restricted a lot what you can do with that mortgage. So you may not be able to transfer it. You may not be able to pay it off quicker. If you wanted to refinance it, you might have to pay some additional costs. So those are some of the biggest differences. Try to go with an A lender because they're generally more reputable. They're the big five banks in Canada. But obviously, if you can't get it through an A lender because of income or down payment or credit or something along those lines, there's a lot of great B lenders out there as well. And you just kind of have to you should go with the situation that's going to be most beneficial to you. If it's going to be going through a B lender because they can get you more money or they can get you, um, some different terms, then just go with a B lender. Because sometimes with the A lender, they're pretty selective and they're more flexible as well, but they're very selective on who they lend the money to as well.
Yeah, and I'll add on to that, Pritesh. That's a really great question. So first of all, like if you're well qualified, you have a right down payment, your finances are decent, you don't have any issue getting a mortgage. Start with a lender. Start
Mm-hmm.
with one lender. Try to leverage as much as possible with that lender, especially if you're like me or like Pritesh, who are looking to invest like grow their portfolio. If you want to buy more rentals, more investment properties, try to take one A lender, max out on
Mm-hmm.
them, and go for another lender. Because especially when you're trying to get multiple properties, it's good to leverage one lender at a time, and so that there are every lender has different what do you call the policies, where some lender says they will lend up to 6 properties or 5 properties. How many properties that you guys lend with
Yeah, so
your?
we do 4 rentals plus your principal residence, so
So
5 total.
So you guys do up to 5, and there
Mm-hmm.
are other lenders who say like, we will lend. But what if I have properties with other lender, another 5? Do you
Mm-hmm.
still get me up to 5?
Yeah, so we have certain thresholds that we can go up to, and then after your portfolio reaches a certain size, so let's say like 7 or 8 properties, we have to then refer to a commercial, because
Mhm.
then it turns into a different type of lending, right? Because that your
Yeah,
portfolio is so heavy on residential that it can't be serviced by retail lending anymore.
yeah. So exactly, that's the reason why like I like to get one lender, maximize whatever their policies are, and go find another lender who will lend another 5 or 4 or 3 with them, um, even with the other portfolio. And there are lenders out there who will lend 15, 20. Now, um, for me, like my RBC said, I cannot lend you anymore. Then I went to CIBC, and then CIBC said, you're already done here. Now I'm working with a credit union who is like, said like, okay, bring it on. They're a little bit more fees, a little bit more interest and plus a little bit more fees, but they said like bring it on, I can give.
Yeah,
So the good thing is now you if you leverage all, the first A lenders, now you're paying less fees, you're getting better rates. But when you get to a point where you don't have a choice, now start paying that extra fees or extra interest. So
exactly.
that's a great question.
Yeah,
Thank
in the
you.
beginning, you want to keep those costs as low as possible, right? You want to keep the interest rate and those fees as low as possible. And then once your net worth is growing, those other fees and costs and interest will become a second thing for you. It won't be a single
Yep,
more.
exactly. Okay, so the next question, Andrew. Good evening. Good evening, Andrew. What percentage of rent do banks usually will consider as income when qualifying for a mortgage? I believe he's referring to buying a duplex or triplex or fourplex.
Yeah. Yeah, so the it's different. Some institutions it's different. They'll use 50%. Some institutions will use 100%. Usually across the board, it's 80%. For most financial institutions, it should be right around 80%. With my team, it's 80%. That's what we use. We use 80% of the rental income to add to your total income, whether it's duplex, triplex, fourplex, single unit, single family home rental, whatever it is. We use 80%.
Yeah, that so that will help to qualify you for JAAG. Search for JAG, JAAG. That's a company whom I know who used to do rent to own. I don't know if they are still doing it, but just go do a quick um, search on JAG properties. Probably, I believe they're still in the business. They're still they're heavy on rent to own. Manha. Hi, could further renting be counted as the income to add to the total income? Um,
So, so if you mean by, let's say you're buying I think we covered this a little bit earlier. If you're buying a house that's currently not rented and you're gonna buy it to rent, then yes, we order fair market rents on it, even though there's no tenant in it. Same thing if you're buying a duplex, triplex, even if they're not tenanted, we can order fair market rents on them, which is technically your future rent amount. So I don't know if that's what you meant by your
or
question.
maybe I'm guessing he might be considering like if I'm buying a single family home, but I would like
Mhm.
to add a basement suite in future.
No, so they won't consider that unless it's already in place, meaning you retrofitted it legally to be a separate unit. That's the only time that we'll consider future rental income in those. But anything else they won't consider because it's a single family home still.
Yeah. So it has to be a legal unit.
Yeah.
Ankit again, what do you do in case where a lender are not approving you enough mortgage considering with the current situation of Windsor housing price?
Well, I mean, there really is no solution to that, right? What can you do if the lender's not approving you for enough? The only things you can do is you can either add a co-borrower, so you have to either increase your income, figure out a way to, generate some passive income, or you have to increase your down payment so that you can try to eliminate the need for a CMHC or default insurance. Remember, it's not just up to the lender. There's also a default insurance company that has a say in the matter. So CMHC, CGMI, Sagen, those are the three default insurance companies. So there's really no simple solution to this. The only solution is to, you have to try to increase your income or try to add a co-borrower, or the other alternate lending options like B, C lenders, where they may be able to lend you more money. But again, they'll charge you maybe a higher interest rate or more fees. Aditya, what's your take on this?
Or go for a house hacking where you have extra
Yeah,
income coming in.
yeah.
But also another thing that I heard, again, correct me if I'm wrong, Pritish. Um, does the lenders have different ratios that they look into?
Yeah, I mean the ratios are the same across the board. We look at the ratios for every deal we do, every single file we do, whether you're first time, second time, refinancing, whatever
But
it may
like, does
be.
it change lender to lender? Like, if one lender has a 40%, or what's the income to debt ratio has to be like, certain X percent.
Yeah,
Some lenders might have a 2% more, which allows
yeah,
you to get a little bit more.
yeah. So the guidelines are the same for every financial institution. The total debt ratio should be 44% or below, and the gross debt ratio, which is your housing cost, which is your mortgage payment, your property taxes, and heating. Those three is your housing cost. That has to be usually 39% or below. Um, what you'll find is that when you go to some other lenders, because they're not as heavily or they're not maybe as heavily federally governed as some of the bigger financial institution or A lenders are, they can maybe bend the rules a little bit more versus where a large financial institution which is federally governed will not step outside those guidelines. So the answer to the question is, with an A lender, you're probably going to not be able to step outside of those guidelines. You definitely would have to go to alternate lenders for the
Okay.
for
Uh,
to get some of that
Again, that's a
flexibility.
great point. So those are the cases where B lenders will come in handy.
Yes, exactly. Yeah.
Javid Khan. Hey, Javid, how are you? So his question is like, can we get mortgage if we are on a contract job? I'm working at the same job since December last year, and my contract expires end of March next year.
Gotcha. Yeah, so like your situation is different than other contract job situations, right? So every contract job is different. The simple answer, the if you go by the book, the answer is no, because contract work is not guaranteed. However, given your situation and your start date and your end date, which is further away, there's definitely a way around it. And so what you would need to do is you need to connect with the right lender, the right team that's going to understand your situation and put together the file that is going to give you the highest approval rate with the highest limit. So in your situation, yeah, I definitely think, Javed, you can definitely get a mortgage based on when you started and when you're ending. But if you're very forthcoming with the information about the contract, and the answer by the book is no, they don't consider contract work, simply because the contract is going to get terminated with no guarantee of employment moving forward. But we can work within certain contract guidelines. So it's not
Yeah.
it's not a
Now, again, that's
yeah,
another great point. This is exactly where we need a right experts in the place, right? Like,
exactly.
a lot of people don't understand why working with the right people is really key.
Yeah.
Because, these are the situations where um, the mortgage person can be creative. Hey, here, my client has been doing this contract jobs for a while, and he has another contract job in line. He just like the contract jobs than full time because he gets paid more. So
Hmm.
he will evaluate the whole case,
Situation, exactly. Yeah,
situation, and see what's the best way to present the lender in the way
exactly.
that lender would approve it.
Yeah,
So that's exactly why you guys have to get in touch with expert. Here I work a lot with Pritish for a reason, because I like to you know have creative and hardworking people in my team, because that's the only way we all can you know achieve more with less efforts and less stress.
for sure.
So, and by the way, guys, the guy who made my 17 unit building dream come true is this guy. So thank you, Pritish. I just want to bring up that.
No, I
That's one
appreciate
of the
it.
reason why I always have a lot of respect for you, because that was like very tough deal. It was like
Yeah,
literally you made it happen in how many days? Like it was like less than 3 weeks.
yeah, yeah.
It was like,
It was like the perfect time. It was right time, right place. We connected. It just kind of happened, and
yeah.
I'm happy I was able to push it through and get that done for you, and now here we are. right? Here
Yeah,
we are
again,
for doing this,
that's exactly what
right?
I mean. The having the right people, right? Like that was like just happened like that.
Yeah,
But I was impressed with the way you guys work, and the way you look at the profile.
for
Do
sure.
your best to help the client. Of course, not every case is similar, but at
Yeah,
least you put your 100% best to make it happen.
yeah.
So we'll go for the next question. Hi Aditya, hi Pritish. For mortgages, will government benefits be considered income? Also, will an employment letter from a corporation which I own um, sufficient? Is
Suffice. Yeah.
suffice? Okay.
Yeah. So good question. Yeah. So there are certain government benefits that we do consider for income. So most common one is Canada Child Benefit, right? People who have kids, they get Canada Child Benefit every month. We can use a percentage of that towards income. So that's one of the benefits. No, we can't use CERB or any of those types of benefits that people got through COVID. We're not allowed to use that income because obviously it's only for a certain period of time, which was during the pandemic. Um, and then, can we get an employment letter from a company that you own? No, that would not work. If you're self-employed, there's different guidelines, different income documents we require for self-employed individuals. Generally, it's 2 years tax documents, your notice of assessments, and your T1 generals to ensure that, and then we use a 2 year average. So we try to see if you're consistent with your income, and then we use a 2 year average. So I think that hopefully answered all your questions there.
But what if just a similar situation that I'm in, right?
Yeah,
Like my corporation that pays salary for my wife.
yeah.
Um, so genuinely, she's getting pay stubs and everything. So can that corporation have a letter for my wife if she's buying
Okay,
her
so
investment?
you're not gonna like the answer to this, but no, that will not work either. So whenever the okay, so the answer by the book is whenever the relationship is arm's length. So it's a immediate family member, or it's your brother, cousin, someone who's close to you. We have to use a 2 year average, simply because your family member, whether
Okay,
it's your cousin or your uncle, can to help you out. Say on the letter you make $200,000 a year when you really don't. So
she's getting from
it's
the same corporation. What if she's getting from last 2 years, 3 years?
then we use the average. We just use a 2 year average. So we
Got
use
it.
a two
Got it.
year average. But employment letters are easily, like I said, if you're writing a letter for your wife, you can easily write that letter to make her income whatever you want it to be. And that's why we ask for the 2 year average when there's an arm's length relationship, to ensure that
Got it.
we're using a consistent figure.
Maybe again, I'll say like that's where maybe sometimes different B lenders might have a different rules.
Or if the lender doesn't know.
Yeah.
Okay.
So again, we are not giving any financial advising
No,
here,
no,
guys.
yeah,
This is
exactly. No,
purely a friendly investor conversation. So please contact your professionals.
that's
Warning,
right. That's right.
whatever. Okay, gameplay. I love this name.
Yeah.
Um, hey Pritish, is it possible to lock the interest rate on a home line of credit? Oh wow, I never heard that question.
Yeah. It's if yes, for how long? Okay, great question. So your home line of credit is it's a line of credit. So you can't really lock the interest rate because it's based on prime rate. So it'll be prime plus 0.5% or prime plus 1%. That's how your home equity line of credit works. In order for you to lock it into anything, you're going to have to convert it to a mortgage. So a lot of financial institutions do offer that. If you have a home line of credit, they allow you to convert it to a mortgage at any time. So depends on which financial institution you're with, they'll allow you to do that. But you can't lock it in forever, no, because it's based on prime, and Bank of Canada controls the prime rate.
I'll ask a follow-up question on this one, Pritish.
Yeah.
So first of all, for people who don't know, what's home line of credit, home
Yeah.
equity line of
So
credit?
yeah, home line of credit, secured line of credit, home equity line of credit, all three things are the same thing, some common terms. What it is instead of having a mortgage on your house, you have a revolving line of credit. Revolving debt is debt that you can access, or sorry, revolving liabilities are liabilities you can access on an ongoing basis. So it's a secured line of credit on your house. So your limit will be, let's say, $300,000, and you only pay interest on the amount you actually borrow from that line of credit. So if you borrow 50,000, you're going to pay interest on 50,000. If you borrow 75,000, you pay interest on 75,000, and you can pay it down as quickly or as slowly as you want.
Yeah, I love to jump on more on this one because this is my favorite one, especially if you own a primary home, you have a good amount of equity. So, for example, if you own primary home that you have a mortgage of 200,000, but your property is worth, let's say, 500,000. So now, when you go to the bank, you ask for a refinance, you can get a new mortgage for 400,000. So
Mhm.
out of 400,000, you have 200,000 to pay the old mortgage and you have extra 200,000. So now you have an option to take that 200,000 as a cash. So if you take it as a cash, now from the day one, you will start paying principal plus interest on the
That's right.
whole 400,000.
That's right.
And if you're taking the same amount instead of taking the money, maybe, in my case, I don't want all that money as of now. I'm putting that on a line of credit. So the same 200,000, now it's on the line of credit. Technically, it's just the same money that available for you to borrow.
That's right.
But this time, you just borrow whenever you need and pay interest only payment on the amount that I used. So I'm paying less interest in a
Well, because you're not borrowing the money right away. You're
yeah.
waiting to borrow the money until when you need it. Yeah, if you do the mortgage, like you said, if you take everything in the mortgage, as soon as that mortgage funds, you're paying the interest on it right away. Where with the line of credit, you can wait until and you don't have and you only pay for what you use. So maybe you don't need the 200. Maybe you find a project and it's not as much money you need to
Yeah,
invest in.
exactly. Another great thing, like personally, like especially HELOC on a primary resident, especially the house that you're living in.
Yeah,
Now, because you have the HELOC, you're paying your mortgage down. If you want to accelerate your payment or whatever, your principal will accumulate on your line of credit. So your line of credit will increase,
that's right.
especially if you're an investor like us, who wants to keep on investing primary. Because you have this line of credit, you can use it and invest it, and you can write off your expenses, your interest on that line of credit. And
Mhm.
whenever you sell that property or whenever you sell that investment and you have extra funds sitting in, you can pay back this interest, so you can reduce your. So there is a lot of benefits
Yeah,
on that I don't want to go too deep into that, but
we could
uh,
talk about that for hours.
yeah, exactly. That's a the what's the concept? What's that?
There's it's a maneuver, the Smith maneuver.
Manure. Yes, that
The
that
Smith
literally
maneuver. Yeah.
caught me on that concept. So if you
Yeah, the
guys
Smith maneuver. That's what it's
Smith
called.
maneuver, yeah. If
Yeah, that's
you're
it.
curious, there is a book written.
Yes.
I think it's concept itself called. If you search for Smith maneuver, you will
Yeah.
find that book.
Yeah.
So interesting. Out there is a video on YouTube. It's like 1 hour or 1.5 hour long. He explains you a whole advantages of how you can take the primary home equity and make it a solid the investment. So go deep into that one, but for now,
What,
let's
what's
continue with the questions.
what's the saying I did? Let your money go to work for you. Is that right?
Yeah, let your money go forward.
Rich
Yeah,
dad, poor dad, right? So
yeah, exactly.
yeah.
When I read that book, man, I was so hooked up. I'm like,
Yeah.
oh my
Yeah.
god, how come no one
I'm
told this
reading it
thing?
again now. I'm reading it again right now.
Yeah.
Time to time I just go back to it. Yeah.
I, because it's sometimes so many people miss that
Yeah.
opportunity. A lot
Yeah.
of people just sit on the equity
Yeah.
and do
Yeah.
nothing, like because they're afraid of losing the money. So let's go to the next question again. Andrew here. Um, I'm new in Canada. Have been working at a job for last 2 months. How long until I can apply for a mortgage? Consider 20% down.
Yeah. So new in Canada, very new in Canada. You want to be in your job. You got to show at least 3 months before we can consider anything, right? 20% down payment is great though, because that gives you an edge because you don't have to go through the insurance. You don't have to go through the default insurance. So generally, you want to wait 3 months so you're past the probation period. Most likely, your lender is going to request you to provide a letter from your employer stating that you're not on any sort of contract or probation because of your tenure in the country. Couple other things, probably no established credit if you've been in Canada just for 2 months. So, you probably want to wait about 6 months because you can try to establish some credit. Generally, all the banks, by the way, right now, if you guys are new to Canada, you can go in and they have newcomer visas like credit cards that you don't have to have any credit. And that's a great way to start establishing credit right away. They have newcomer packages. So I'd probably say wait at least one more month so you're past your probation period and you can provide that letter to your lender. And then the more time you have with a visa or bill payments, cell phone insurance, car insurance, we can use those items as a form of credit history as well.
But Pritish, why don't he can utilize this 1 month, reach out to the mortgage person, reach out to
Yeah,
you and start
yeah.
the
Start
application,
start the
get the
process. Yeah,
pre-approval.
start the process for sure. Start working with the person. They'll tell you what they'll need. They'll coach you through it. So if it's me, I'll walk you through it, tell you what I need, and then we just start the process.
Yeah, and also
And
finding a property will take time, right? He's not
yeah,
going to get it
absolutely.
right away.
Offer's not
Like,
going to get accepted right away necessarily, right?
yeah,
Your
so
pre-approval will be good for 4 months, especially because you've got the down payment funds already. So that makes things a lot quicker and easier. And like I mentioned earlier, don't have to go through CMHC or anything. So it's just all in-house decision.
yep. Next question, Pitya. Is it possible to do house hacking in Windsor with a part-time job as university student with an excellent credit score?
It's possible, but it'll be extremely challenging, right? So the first thing will be is if you're trying to house hack, we can't use the income from that house unless it's like a legal unit. So it's going to be tough. If you're buying a duplex on a part-time job, 2-year salary is what we would use. So for anybody with part-time job, students or anything like that, it would be a 2-year average. And then the third part would be is your status. So if you are on a student permit, then you won't be able to get any lending, I don't think, through an A lender. But if you're on a work permit, then absolutely. Obviously, if you're a PR card or citizen, yeah, you would still qualify. But 2-year average, 2-year income average is what they'll use for you to qualify you.
Yeah, and again, that's where you gotta. If you don't qualify, maybe go find a partner.
Yeah, get a couple friends
Sometimes,
together. Yeah,
yeah. So don't just fixate to the concept that you must qualify, because we all have loved ones. We all have someone who would love to help us. So you reach out.
yeah, yeah.
Sai Manikanta, for first-time home buyers, excluding 5% down, do we need to show any extra savings for pre-approval? Another good question.
Great question. One of my favorite questions so far today. They're all good questions, but this is a very good one. And the answer is yes. So everybody thinks you have to show 5% and that's it. And no, you have to show 5% plus you have to show 1.5% for closing costs. Even though your closing costs is not going to be 1.5%, right? So if you're buying a house for $300,000, you have to show your 5%, which is $15,000 plus 1.5% on that 300,000, which is $4,500. So your total you need to have in your bank or your investments or savings is 19,500. Let's make it 20. So you need 5% plus 1.5%. So the answer is 6.5% is the minimum you're looking for pre-approval.
But what if I am like totally a first homeowner? Like I never purchased a home. The land transfer is generally write off, right? Like under 400,000.
Correct. Yeah.
So in that case, if I have
They'll
like just
still
1% or 5%, or can I
yeah,
use that 1% from my unsecured line of credit or credit card or gifted funds?
gifted funds is totally fine. Gifted funds is fine. You want to try to avoid on your application, you want to try to avoid saying you're borrowing anything to help
Mm.
close this house because anything you borrow is going to trigger a payment. So if it's a small amount, sure, no problem. If you're borrowing like one, two, three, four, maybe 5,000, no big deal. But once you start borrowing like 10, 15,000, not that you would need to close a house, but when you start borrowing larger amounts, it's going to counteract your application. But yeah, generally, like I said, if you have 1%, so if you have 6% total, that's fine. But the financial institutions will look to make sure that you have enough money to pay for the lawyer and any other incidentals that may come up.
Awesome. Thank you, Pritish. AFG, bro, I'm doing home inspection program. Fantastic. and I want to buy a house in Windsor. I'm in Ottawa. So AFG, definitely first thing you need to do is reach out to our team. We also, like, we have the British contact there, so get a pre-approval and then reach out to us. Me and my team, we are here who will help investors, sellers, homeowners here in Windsor, because we are the best one in town, best one in Canada to help anyone with real estate services. So reach out to us. We'll put our contact info in the chat, or search wincityrealestate.com, and just there is a contact page in there, or DM me on Instagram or Facebook, um, or email us. You will see in the description, you will see the emails, phone number, everything. Reach out to us. We Me or one of my agent will get in touch with you in 24 48 hours. We'll help you, we'll set you up with the proper tools and everything. So that's the advice I would give you. I think we answered this question.
Yeah.
Ankit, thank you, Pritish. I think we answered that one. Okay. Ankit, by the way, good job, man. I love your enthusiasm. Honestly, keep it up, because that's one thing I wish I should have done this, like asking questions years ago. Um, the more questions you ask, the more you learn. The more you learn, the more you earn.
Yeah, that's it, my friend. I like it.
So when I was a student, I had a couple of different payments which are on my credit history. Is there any way to erase them? Very good question again.
Yeah, this is a good question. There's no way to erase them. It's just time. You have to continue making your payments. Not to slip in the future. If it's something from years ago, it most likely is not impacting your credit anymore. If it's more recent, you just have to give it time, because once it's on your credit bureau report on Equifax, unless it was a mistake, which you'll have to contact Equifax through their website to correct it. Unless it was a mistake, you can't really remove it. That's the whole purpose of the credit history. So a lot of clients do contact Equifax when there's an issue to get it corrected. And once they correct it, it takes about 30, 60 days for it to show up on your credit bureau for all the financial institutions when they do a credit check. So if you correct it right away, it's not going to show up if a bank or a lender does a credit check right away.
Also, Pritish, like I heard that there are lenders, who would give exceptions if there is one or two,
Yeah.
mispayments or something. Is that true?
Yeah, absolutely. I mean, things happen, right? Things happen where you miss a payment for something, or you had an emergency and you might have overextended your finances. So no, things happen. It's just, as long as it's not a theme, as long as it's not consistent, we're always willing to work with people, right? There are certain minimum credit requirements we need to have, but for the most part, we don't really have any issues. And yeah, we're willing to make exceptions. Again, one off. If it was a one off situation, we can make those exceptions.
Yep. So, guys, it's 8:03. So we'll wrap. We'll take another last one or two questions, and we'll wrap up in next 2 3 minutes. You once again, Pritish, thank you so much for sticking along. Or answering all these questions. Really, like, so far, I enjoyed, hearing all these questions. Great questions, and your answers really, open a lot of eyes. Open
Yeah, for
options.
sure.
Sam,
Thanks for having me.
yeah, so Sam also saying awesome. Thank you so much for all the valuable information.
Thanks, Sam.
Raj Ravi, for a foreign investment in Canada with 35% down, seems CIBC not ready for mortgage loans. So no income in Canada other than in India. Any options? Please suggest.
Yeah, so this one particular talks about CIBC. So different banks have different programs. You want to probably look into that. You can research on their websites. It is tough for foreign investors to get a mortgage in Canada without having any footprint in Canada.
Yep.
So what I mean by footprint is you're not working here, you're not living here. Those if you're new to Canada, it's different. If you live in Canada but you work abroad, it's different. So let's say you're a Canadian citizen but you have a foreign income, you still have a footprint in Canada. So uh, that's a challenging situation when you don't have a footprint. But there are lenders out there that will do it. Just maybe not one of the bigger banks, but there are
Yeah.
definitely lenders out there that will do it.
Again, send us an email. We'll hook you up with some brokers who might do those international for international foreign investors. Again, there is no straight answer because they have to look at so many things.
Yeah.
But send us an email at info at vincityre.com. We'll see if we can find some brokers who might do that. So last and final question, guys. If we didn't get to your question, please don't get nervous or piss off at us. We just you have our British contact there. You have our contact information. Please reach out to us directly. We are always happy to help you. When it comes to real estate, of course, not all the personal situations, but we'll do our best to help you with the real estate services, especially if it's in Windsor or Windsor Essex nearby. And last question, the last the client asked question is here. The Pradeep, this guy, this idiot is my friend from college. uh, so hey Pradeep, how much income is required to buy a first house with 300,000 considering 5% down?
Yeah, so the answer is you need to be around 60,000 for the unless you're Aditya's friend, then you got to be making 300,000 to qualify for a house worth 300,000. So since I know you're his friend, I'm gonna charge you a premium, my friend.
Yeah, but Pradeep, if your income is not enough, maybe if you can increase your down payment, or or you ask your um, up- employer to increase the income. That's another thing. Like if you've been working there for 6 months, 1 year, 2 years, or find ways to make a side hustle, increase your income if you're not there yet, because that's another thing. Don't let yourself down if your current income doesn't qualify. Find
Yeah,
other opportunities or bug your employer to increase the income.
yeah.
So that's pretty much it. I don't want to take any more time because it's already like 8:07. Pritish, thank you so much, man. Always appreciate
No,
for
thanks
all
for
your hard
calling,
work.
man, and thank you for having me. Are you kidding me? This is fantastic. Hopefully you'll help me again at some time.
Yeah, for sure, definitely. We have a long way to go, so we will need your expertise and answer our subscribers' questions here. Everyone is having so many questions, so
That's awesome.
instead of keeping themselves, I'll try to bring experts like Pritish on different areas. So let me know in the comments next one, whom do you want me to bring on. So we will keep on doing this, Pritish. So definitely we'll
Yeah,
have
for
you
sure.
again, because I know we cannot answer all the questions in 1 hour. There will be
No, yeah,
more
there's always
questions.
questions. There's always more
Yeah,
questions for
maybe
sure.
one day we will jump on this HELOC Smith maneuver concept. We'll go
Yeah,
deep
yeah,
into that one.
lots of stuff to cover off for sure.
Yeah. So, guys, thank you so much for hopping on. Make sure subscribe, like if you liked. We spend 1 hour here genuinely trying to help your situation. So just do us a small favor, which is hit that subscribe button.
Yeah, absolutely. Check out. I don't have nearly as much content as Aditya, but I've got an Instagram page. Would love some support there, but definitely, Aditya's doing an amazing job, and I'm just happy to be a part of it.
Thank you, Pritish. And guys, if you haven't got your pre-approval, hit him up.
Yeah,
Get the
absolutely.
pre-approval, get the process started, because if you don't take the first step, rest will never come. But if you take the first step, rest will be much easier. The first step is pre-approval. Guys, thank you so much. Have a good night.
Good night, guys.